All right, folks, welcome to a weekly market recap. This week, I didn't take any trades, but it was an excellent week. The reason it was an excellent week because of the knowledge. All right, this week was kind of ass. Look how the weekly kind of shaped. I know there was opportunity on on Thursday. That setup the market will probably not go down there again. That could have been an opportunity to take to go to the upside, but my setup never got tapped, right? So I didn't take it. But what matters is not that. What matters is what is the biggest concern? The knowledge, right? The knowledge. This week was kind of ass, so a lot of people did get chopped up here. A lot of people did get chopped up. A lot of people did get fucked up. But it was an important week though. How? How the weekly kind of shaped. We know that if Thursday makes a high or low of the week, it's gonna be some sort of consolidation, right? It's gonna be a consolidation week. And Power will like, well, I see Thursdays, making high of the week, but market never goes back down to closing a consolidation candle. So you're wrong, right? Fucking dork. So that is different, right? That isn't a classical expansion, right? So classical expansion has Friday and Thursday as a reversal, right? They have a chance to reverse and had a chance to close in a fair price, so it needs to go down lower. Although it's not gonna close in a consolidation candle like this, it's gonna close in a classical candle, but Thursday and Friday reversing, meaning the next week, Monday or Tuesday, Monday will not soup out the Thursday says Friday highs. It may soup up Friday high because if Thursday was the one to reverse, then go down lower, etc., etc. But how would this weekly candle shape like this when Thursday made the low? It's because Monday and Tuesday already made a big ass wick, right? So the way you know that it will be a consolidation candle when Thursday does make high or low of the week, because there's been days where Thursday makes high of the week, but the candle isn't closed like this. Because at the start, when the candle does, so when the Thursday reverse on a classical expansion week, there's not big wick down here, right? In this case, there's a big ass wick to the upside. So the way you know that you'll be consolidation candle when Thursday does make a low or high of the week is when Monday or Tuesday leaves a big ass wick, which means markets go up higher and close in a consolidation candle, which next week will take on. Next week could possibly support the low, or it could just go up higher from there on forward, because that's what it usually does. Usually, like for this weekly, the weekly consolidation candle will cause the next week to either take out the low or take out the high, then go to the direction where he wants to go to. I mean, that could happen. Or what usually happens is sometimes this weekly CRT, always the consolidation candle, the low or the high won't get souped. What will happen is Friday will act as a consolidation. But Thursday reverse. Thursday did do a big ass expansion. So Friday will act as a consolidation, and next week will soup out the Monday. The Fridays. Friday will act like consolidation. Monday will take out the Friday's low or high. That eventually Tuesday will expand, or Monday could expand also, just like this day, right? Big ass bearish candle. Now, this is the weekly market recap. Beautiful week. On Monday, I didn't take any trades, right? Let's get straight into business. And make sure you guys like, comment, subscribe, share. Make sure you guys join the Telegram link in the description down below. I did say I'm gonna make these promoting in an earlier time of the video, but I didn't even say it. But this is where it comes, right? Let's hope this is somewhere in the middle of the video and it's near the video, all right? Near the start. All right, so this week should be relatively quick, and yeah, let's get straight into it. So Monday, I thought Monday's gonna consolidate and Tuesday gonna take Monday low out, then go up higher. But I didn't do that. Monday expanded. Tuesday did a accumulation mid-pitching expansion. So I was like, okay, Thursday is going to be the one to Thursday or Wednesday is gonna be the one to reverse. But you guys know I don't trade Wednesdays, because if I'm wrong Monday, Tuesday, I'd rather not trade the next day and still have some confidence that week that okay, there's gonna be potential some setups right? And not take trade on Wednesday and let the, even if Wednesday was correct, movement, Thursday, I would take the confirmation, would take the extra confidence from Wednesday because Wednesday confirmed our bias even more, and Thursday is going to be the one to just expand, right? Now, Monday expanded, Tuesday mid-play, Monday high, put down low. I was okay. There's going to be some sort of midweek reversal, constellation reversal. I do not know it's going to be either of those. So what I'm going to do is wait till the confirmation, right? Confirmation is waiting till Thursday. So Thursday told me, okay, it's going to be a consolidation reversal. It's going to be a hammer candle because it's very simple. Just through the market, just through you looking at the market on the weekly time frame a lot, you will see, okay, on a consolidation week, Thursday will make out the week, right? Thursday or Thursday will make a consolidation week if you go back in time. Study this candle. Study this candle. You could do even this candle, hammer candle. I'm pretty sure this one wasn't a consolidation week, but hammer candle, right? Another hammer candle. So just study the market and you'll get your answer. You can see a lot of people think that it's a lot of, this is a lot of ranging on the daily time frame. Keep in mind, this is ranging on a daily. So a lower time frame chop causes a higher time frame expansion. So whenever you see daily time frame or you see the higher time frame or the 15-minute time frame stagnating, what does that mean? That means there's going to be a higher time frame expansion. There's the perfect example. Lower time right before it expanded from the higher time frame, the lower time frame range, lower time frame chop, hurts, higher time frame expansion. Let me get the quote here for you guys. It may take a little longer, but I apologize on that. Let me get the quote. This is very important, right? And this shout out to Aoni, or what his guy name is for this. He is perfectly correct. And I helped him also, but now he says right up here, enter in the lower time frame chop, enjoy the higher time frame distribution. Now consider what would happen if you would enter at the bottom of the higher time frame chop. What would that cause? An even higher time frame distribution. Lower time frame chop, a higher time frame distribution. Well, how? I mean, there's chopping candles here. That's why you gotta use time, right? The way I knew it can be a good X expansion was because through time, right? Time is your best alliance in this game. Time with time again. Why? Time unites all. I found this thing out myself, which took me, not gonna lie to you guys, 6 months, right? Long time. That's actually not that long, right? I was pretty smart to know it in earlier practicing because I was constantly see when I'm taking a trade, I'm like, shit, all right, market is ranging. All right, the lower time frame, I would see like, okay, I literally, I journaled all my trades. I saw, okay, before I took this big ass winners, like those killer trades, I'm like, okay, the time I took my killer trades, this happened. What happened was the market was so shit at the lower time frame when I executed those killer trades. But out of nowhere, huge expansion, right? But before the expansion, quick turtle soup. Okay, that's what constantly happens on all of my killer trades. My 24-hour I had, I showed you guys, like, if you go back to the market recap on that. Before it happened, what happened? Lower time frame fucking chop. This one, lower time frame chop. Go to the next chart I showed you guys, lower time frame chop. All my color trades, I was like, okay, my private color trades, my public color trades, I'm like, okay, there are too many chops here. Before, like when I went to the trade, I'm like, because when I was like, okay, I'm seeing the same fucking pattern over and over for the past 6 months. I'm like, these patterns are causing me some sort of emotion, making me some sort of, I'm second guessing, but always manage to hold through, and the market goes my way, and beautiful, explosive price action right after that chop. I'm like, okay, This is what constantly happens over and over. And I check the guy that I look up to in social media, Romeo, and this other guy, Oni, I don't know, CTT, I don't know how to spell his name, all right? But whatever the guy name is, shout out to him, man. If you're watching this video, I love you, man, all right? But I was watching him like, oh shit, he had the same type of fucking, mindset as me. I'm thinking right, at least, because this guy that I look up to is thinking the same sort as me. I was like, okay, I found this out 6 months after I fucking constantly had to feel the emotion. Now, when I watch this guy, they just give it out for free for the public. I'm like, what the fuck? I had to go through that shit to find out. But what I'm gonna do from now on forward, next fucking time, I'm not going to even fucking, be in a position where I have to find out myself. I'm gonna be wise, learn from everyone and everything, because time unites all. Like every time, you will always unite you. Whenever you think, if you're the best trader in the world, let's say me, you were the best trader in the world, right? We're gonna have more similar traits, right? We're gonna have more similar traits because time unites us. And overall, when you get rich, what will happen, right? I'm not rich, wealthy right now. I'm not successful right now, right? Inshallah, I will be, and you will also, inshallah, right? We gotta believe in God. We gotta keep on striving, right? But when we do become successful, all the stories I hear from these rich ass people, right? Romeo, Andrew Tate, all these guys I see, and his name is not Romeo, it's right? All the name I see, all the rich guys I see, the stories are literally the same thing. Time unites them all back, right? It's through the same fucking story over and over. Same to the market. The shit I found out took me 6 months, and somebody I get for free for the public. I'm like, fuck. I want to give this a secret, but Romeo himself. Let me take this picture. This motherfucker gave it out in 2023. So time, you can see his level is way past beyond anybody that I fucking know. Way past beyond ICT. ICT may be in the market for a longer time, but the amount of knowledge that Romeo have is unbearable. Like, I'm like, shit, I'm like experiencing the same motherfucking, experience as him. I'm getting the same lesson as him. I told myself, what the fuck am I going through the same trouble as him? Right? And it still end up with the same fucking lessons. What I could possibly fucking do is just fucking go and just be wise and just learn from this guy. We'll learn from this specific lesson without me having to go through it. Yes, I may still kind of look at it constantly for me to recognize it, but that's like just through backtesting, like a little bit. Go in the market, backtest 3-4 trades. Guess what? That's enough for you to be like, okay, this is enough. Although the 3-4 trades are not even enough, but somebody else has done already the work for fucking long ass time. That concept is already proven, right? That shit that to happen is already proven. So since it's already proven, I don't have to constantly do it over here, like over fucking 10, 20 years of backtesting. Somebody has already done that hard work. I'm like, okay, I'm gonna take from him. I'm still gonna backtest it like 3-4 trades, but guess what? The heavy lifting has already been done for this other guy. Cool, right? Look, both speed and aggressiveness into the key level. But when I'm like, this is not a fucking key level. It is our key level, right? Our CRT is the range we trade. So when he means key level, in my perspective, he means my range. And also, you also gotta keep in mind of the key level also, right? A key level, it could be this low, right? It could be this Ferrari gap. But the majority, the key level doesn't even fucking matter, to be honest. Once you get the higher time frame right, the key level matters when market is clearly telling you, bro, there's no fucking key level here. Just wait for this, right? That's the only time you get for a key level, right? But other than that, there's so many fucking key levels here, right? There's a key level because of the higher time frame. There's a key level here, right? Everywhere for Ferrari gap inversion, right? There's key level everywhere. The only time you would want to look for a key level is when the market is clearly in a huge expansion, right? Basically, all-time high, or not even all-time high, is an all-time high, or market is rallying down a lot by a lot of pips, and there's no opposition, right? There's no consolidation. This is because the market is going up or down. Then eventually then you would want to look for a specific key level, right? Other than that, you don't want to look for a specific key level because this market consolidating. There's so many fucking key levels already out there, right? So in that case, your key level would be the CRT, right? The CRT is your key level. Second, if the market's going at all-time high, constantly going up, or is it constantly dropping, then you have to look for a key level. Other than that, you don't have to look for a key level, right? Because your key level is going to be played as just a CRT, nothing else, right? So both speed and aggressiveness into the key level, boom, right? Consolidation births expansion, expansion births consolidation, right? Consolidation, expansion, consolidation, expansion. The expansion, it was a reversal, boom, right? Because market can't just constantly go consolidate down, because the market needs to go up to the, it can't just go fucking down. It can't just go up. It needs to go through the phases, right? That's what makes trading so hard. It's all based on science, right? That's why trading is so hard to fucking trade. Why? Because fucking the reason why trading is so hard is because the market doesn't repeat. It does repeat the same thing over and over, but it goes through cycles, right? It's not always gonna repeat classical expansion profiles, right? It's gonna do classical expansion profiles. It's gonna do mid-week reversals. The classical expansion profiles with Thursday reversals, Friday reversals. Is going to do consolidation reversals, right? It's going to have different shape of candles each week, but they're more similar, right? They're similar, and all you gotta do is adapt. Now you adapt to it, right? All you gotta do is, okay, you first learn these concepts. Once you learn these concepts, since the market goes in cycles, you have your higher time frame boss in mind. All you gotta care about is the higher time frame level, which is your daily CRT. In this case, right? The daily CRT, your daily down below, up above, are your key levels, right? And the daily retest of the range, which is the daily order block, is going to be your key level, which you use those specific right over there to, determine. Okay, I don't know what how weekly profile would it be. I could possibly determine how the weekly candle could shape, because the last week was a hammer candle, which means next week could constantly expand, right, without reversing. This week fucking expanded, right? Big expansion. Right, at the start of the week, although it didn't end like that, but expanded at the start of the week, right? And we expanded at the start of the week because last week was a hammer fucking candle, right? So it's simple as that, and make sure you guys use that to your knowledge here. Now, but going to this specific post that I myself had to find out, I was like, as I said before, I felt unnecessary emotions for no fucking reason. I'm like, bro, why do I gotta feel this emotion for me to learn, right? And eventually knew, okay, because of this fucking shit, I should have already known, right? I was like, because you can see me sometimes make a theory, right? You guys see me make a theory about the valid high, valid low. But guess what? The valid high, valid low rules are fucking right. They're fucking, proven to be true. Because if you go back in time about Riot post, Riot, what does Riot say? Riot basically says what? He says only the market moves based on highs and lows. A failed swing, or we call it, now is it called a failed swing? A swing, or a swing to CRT, right? Right, failed swing to CRT. Because one candle, right? The first candle is accumulation, second candle is manipulation, third candle is expansion, right? To the downside, which leaves out there to be a CRT, which means there's liquidity taken already. There's not enough liquidity there rested, right? Equal high, equal low to the tick, right? Same price point, or not enough for the market to move because there's a portion of liquidity I got taken, right? So a valid high, valid low is like a bullish bearish candle. There's no soups, right? So that means there's enough liquidity for the market to be using that specific high to go. If there is none like that, market will usually push it out, make an actual valid high, push it to valid high, then go down lower. That's what you guys see. That's why you guys see third drives. That's why you guys see, market reversing after you guys see, a valid high, valid low getting formed. Then you can see market reverse. I'll give you guys multiple. I already gave you guys fucking multiple examples. Go back in my videos. This is all from Robin, by the way. The time like the same fucking problem I face. Because if I have that rule was the most important, literally the most important rule for me. Because without that market, I would enter too early, and when I enter too early, the next setup that happens right after the right setup when it happens, I don't trust it because shit, I already took my trade for the day. I'm fucking fried. All I gotta do is wait till the next day, and guess what? The trade is already gone, right? But look, speed and aggression to the key level, boom, right? Now, consolidation, big bear, fair bear flag, trend following trap, more speed and aggressiveness away from the level as a reversal. And I told you guys from my, how to trade turtle soup without confirmation. If you pay attention to it, it basically talks about this shit, the whole fucking video. Now, when it does go has aggressiveness in from the speed, when it does reverse, it's gonna have right before he reverses, it's gonna have some sort of turtle soup, right? Now, go to 1 minute time frame. I could show you guys last week. If I go back in time, if I have the process in here, I'm not sure though. If I go past in time, last week was when was it last week? It was some week that there was some sort of a clear turtle soup manipulation. Let me see if I can use my intuitions here to get that. I don't think. Oh, I don't know where is it at. But the same thing that happens on a 1 minute time frame, the market's fractal, right? Like, this is a simple answer, right? The market's fractal, same thing that happens in a 1 minute time frame will happen in a higher time frame. I don't think it happened here because it was a clear news play here. But yeah, I didn't have it here yet because I said the market changes cycle of entries, etc., right? Now, as I said, it's a quick little sauce time. It's all now showing you even more, a little bit more further right before we go and scope primarily on the we just go primarily on this guy's post. So fucking true. All right, let me get this shit right over here. Enter in the lower time frame chop. Enjoy the higher time distribution. Now consider what would happen if you entered at the bottom of a higher time frame chop, and you get an even bigger fucking expansion, right? Higher time frame chop. There's gonna be some sort of a big fucking expansion, then eventually some sort of reversal, right? But you can see same thing over here, right? Lower time frame chop, very fucking lot of chop, right? Out of nowhere, one fucking Pacific candle expanded, right? So same thing happens in the lower time, will happen in a higher time frame. Lower time frame chop, higher time frame distribution in the daily time frame. Now, going back into this quote here, when I said market right over here, oops, here. What I said here was, look, I made a comment, market tends to make itself messy on lower time frame when it's the right time to distribute. All these stats, that's what you see. If you pay attention, what I said in the start of the video, time. The good old lingering characteristic of price right before they rocket it higher or crash it lower. The boring candles are the ones that needs to be studied. The boring fucking candles are the one needs to be studied, right? The boring candles are the ones, right, that needs to be fucking studied. Boom, right? So, but like, what the fuck are you giving him some credits, right? Like, what are you promoting him, right? I'm not promoting him, but credits gotta go where you gotta go, right? This specific thing, right? This specific shit I found out myself. This specific high session that happens, I found out myself, but somebody else published it already, which is Force Romeo. Then he did it very later on, around like September, right, this year. Then eventually, okay, let me speak it to the public also, but I will give him credits because, overall, to be honest with you, he made it much more. It made it much more clear. It made it clarify even further, right? Because when Romeo did it, I wouldn't understand it, right? I was like, oh shit, when I would do myself, I didn't understand it that much. I'm like, okay, because I don't want to make some bullshit theory, right? And this guy, I was like, okay, Romeo did the same thing, but I didn't really understand. I was like, what the fuck does it mean by this, right? But I see the same thing happening over and over. What does it mean by this, right? And guess what? Somebody else posted about it. I'm like, oh shit, time and that's all, right? And that's a quick little lesson. I mean, it didn't take a long time, but that's what you need, right? Because people want to like, well, you're not a successful user, you're not a successful trader or whatever the fuck you might call somebody, but you know, time is a missing ingredient, right? I can't be successful out of a fucking night, because my trades, first of all, takes fucking days to form, days to take profit, fucking possibly a couple hours or whatever, take my stop loss, but my setups take days to form, which if I want to make any progress, it's gonna take days, right? And those days gonna make, obviously gonna profit me way fucking more. But it's like a what do you call it? How do you call this? I give full-time payout with working what was the word? While now working full-time, right? I get full-time pays, full-time withdrawals, etc., paid, right? I'm getting paid full-time, but I'm working part-time, right? I'm barely looking at the market, right? Which is very cool. And that's what Romeo says. As I said, Romeo said, time unites all, right? Romeo said that you want to focus on something that you take very less trades on a monthly basis, but you make so much fucking money. So you basically work part-time, but you make a full fucking time money, right? You make a lot of money. So markets are basically like you're investing in the market, etc., right? You making money, etc. But that's how it's supposed to be, right? You don't want to take fucking 100 trades in a fucking day and just make one pip. You want to take one trade a week, two trades a week, it's a couple of trades in a month. Not a lot. Just take a couple of trades a month. But those have to pay a lot. Those have to bail out. Those have to pay out a lot, right? That's why you gotta think about your risk management. You gotta think about how much should I risk, right? Should I risk 1%, 2%, 3%, 5%, right? Once you think about like that, then you put in low. Okay, I could grade my setups, right? Grade your setups, but the only way you can grade your setup is through experience and the way how you feel, right? I mean, the way you can grade your setups, like is this an A plus? What is this? Is through experience, but to grade to risk more than 1% or 2%, like 1%, right? Because that's the ideal. You would need to have experience with what? Experience with what? Emotions, right? You'll be like, okay, am I confident enough in this? What's my emotions feeling like? And use that as a way to determine how much you would be risking. If you're going to loss, you'll find out yourself how much you risk. Usually, I haven't taken a loss when I'm over leveraging, right? And over leveraging meaning like when I'm risking like 2%, 3% per trade, or 5% per trade sometimes. I haven't had a loss, but the way I know, okay, how much should I de-risk to how much, right? The next trade, how much should I de-risk to, right? Because I don't want my losers to overtake my winners, right? So what I do, okay, I risk 5%, I took a loss. Next trade, I'm not gonna risk 5% again, because it all depends, as I said, it all depends on your psychology and emotion, but you also want to keep in mind our risk management. But you could always feel, very confident on every fucking setup. That's what all my setups, I feel very confident, right? If I feel confident on all my setups, well, my risk at 5% also on all of my setups, right? And all of my setups, I feel very confident that it would deliver, right? But if I feel like that, all of that, and not all trade goes to winners, right? So if I take a loss, next trade, I'm not gonna be fucking confident again. I'm not gonna be in a position to risk 5% again, because that made me feel confident, but that's fucking dumb. Because if I lose again, I'm losing 10%. Now I'm losing too much money. Now my losers are overtaking my winners. So what I gotta do? Okay, next trade, I may risk 3%, 2%, 1%, just to make that specific loss back. Because the goal is to constantly grow. So make the loss back. Now go back to risking 5% or however much. Usually I would go from a 5% loss with 3%, from 5% loss risking next trade to a 3%, right? If that goes on loss, then risk 1%. If that goes on loss, then risk 50%, right? Now if I go back to getting a winner, okay, let's make the 1% back, 1% loss back, make it back, right? Make it back with a couple more RR, plus make that 2% back, right? Boom. Now once I make that back, raise that amount again, raise 1% again, now raise 1%, you make like a 6 RR or a 12 RR. Okay, now I made 12% gain. So now I made my 3% loss back. Now when I do a 3% loss back, I'm gonna risk that amount to make the 5% loss back, but even more profit. So constantly when I risk 0.0, when I risk 0.5, when I risk 0.50%, I'm making the 1% loss back plus more. So when I risk 1%, I'm making the 3% loss back plus more. When I'm risking 3%, I'm making 5% loss back plus more. But when like, if I lose 8 trades in a row, with this specific risk management, so first trade, 5% loss, second trade, 3% loss, third trade, I got a serial killer. Second trade, let's say we're 2% also, right? Second trade, the third trade, we lose what? 10%. Second other trade, 11%, 11.5% on the 5 losses. The next trade we take a loss, 12%, 12.5%, 13%. Right, that's 8 losses in a row, which that rarely happens, by the way. If you keep your risk management, if you follow, just take fucking daily levels and above, and this will never happen, right? We take, let's say, another 2 losses, right? 13%, 13.5, 14% loss, right? But we're like, oh shit, that's a lot. That is kind of a lot, but we got to be smarter, right? And after the fucking first loss, you gotta know, okay, what did I do wrong? Reanalyze. Next trade, you take 30% risk, make the 5% back, plus profit, and plus enough profit to risk to make a buffer on the 5% trade again. Then it's a 5% take it again and go on from there, right? This is by risking the risk management. That's a quick little risk management. You guys could take it, but I suggest not taking it. Why? You only want to take it when you're experienced. If you're not experienced, and if you don't use your emotions right, it's not gonna fucking work out for you. You're gonna fucking lose, by the way. You're gonna lose a lot of money. I've lost a lot of money, actually. I've lost, like, I had a time where I lost 4 trades in the back, but I was so stupid that I would constantly risk 5%. So I lost what? Fucking 20%. I'm like, shit, in 4 trades. I'm like, that's the biggest fucking loss I've ever had in my fucking trading career. And that shit took me a while to make it back, by the way. It took me fucking 1% risk. I made only fucking 4% one trade. I didn't make 1%. I didn't make, one of the fucking numbers go down. Next trade, okay, I was like, okay, let me just risk a little bit more. I brought this down, but it still wasn't enough to bring this, other one down. So okay, let me risk a little bit more, bring this down. And eventually, also brought this down. And eventually, okay, let me take one more trade with a little bit more risk, brought this down, and got me back in break even. But that took a long time because these trades take a long fucking time. It don't happen every fucking single day. I can't take a 12-hour trade, 20-hour trade, 30-hour trade, 60-hour trade in a day, right? It's not gonna happen. It's gonna take fucking weeks, and it's gonna either you have to deliver also, and you have to pay attention to. You could take a loss, right? Now, that was a lot of yapping, but very fucking important yapping, right? But now let's get straight into weekly market recap here. Monday, no setup. Tuesday, no setup. Wednesday, I didn't take a trade. As I told you guys why. I wait till Thursday. I'd rather be smarter than not, right? So Thursday, I was okay. If Wednesday does make the low of the week, I'm gonna wait for Thursday. Still, regardless, why? Because more confirmation, more confidence, right? So okay, I'm gonna wait for that. Okay. But the Wednesday didn't make the low of the week, so Thursday make the low of the week. I was like, okay, this could be some sort of consolidation reversal. Also with a, consolidation weekly candle, so market needs to go up higher. So what I had was our CRT, New York Cursor Profile 1, when accumulation, 5A mid-pitching expansion. 5A also expanded also, so it doesn't really matter about that. But also, regardless, the 9A did expand still. Now, also, we also had a daily CRT, daily key level, just auto block overall, being general. And what else do we had here? That's all we had. Nothing else here. Nothing much. That's enough. We also the higher time frame boss in mind. Keeping that in mind, we had also had a higher time frame boss in mind. lower time frame. Apparently, I didn't give a fuck about the key level, by the way. I only give a fuck about the CRT because we already have so much key levels because market is not constantly going in one-sided direction. So the key level didn't really care, but I still marked it out. Just, to pay attention to it. But on the lower time frame, what we had here, I was like, okay, we purged out this low, but this low had a valid low. By the time we purged it out, was not the right time. We're looking for 6 a.m. to 10:30 a.m. So market purged it out. Boom. And yeah, I made a mistake this day. This mistake is simple. This is the only lesson of the week, is to, regardless if the market is regardless if the total setup is near the market price or not, I must mark it out regardless, because the inevitable happens, right? The always happen. Something gets tapped. Although today didn't get tapped. It didn't get tapped on the other brokers, but my broker didn't get tapped. But lesson is very clear. We had a fair value gap below an old low, which is this old low, and you could call this old low because market didn't tap it, but other broker did. But I don't trust other brokers. I primarily trust Forex.com. So it never got tapped. So okay, cool. I'm gonna wait. I'm gonna see what happens, right? Eventually, market went our direction and never seen again. So I didn't miss a trade, but there's a lesson out of it. So we had the model 1, marking up to the model 1. I was like, okay, if the market does tap the model 1, I want to enter in a Russian block, right? Put my stop loss at the 50% mark of the Russian block and go on from there. But market never got tapped, never tapped it. Market did tap the breaker, and just guess what? Keep in mind, this is the right breaker. This is a breaker that burst the key level. Key level being, this is a breaker that caused, this is the high that caused the total soup. Now, total soup, the only total soup we give a fuck about is CRT, right? So boom, tap the breaker, goes up higher. We could have taken that, but I'm not gonna take it simply because that's not my system, right? Now the lessons are very clear. The lesson is to, regardless if our total soup setup is regardless the total soup setup is near the market price or not, regardless if the market will tap the kilo, the total soup, trade entry or not, I must always mark the entry, regardless if it's gonna tap it or not, regardless if the market is near or not. I must always map out and mark out the key level, the entry, right? So yeah, thank you for watching. Make sure to like, comment, share, join the Telegram link in the description down below, and I will see you guys later. Bye bye.